All right, let's jump right in. Look, if you're watching this, chances are you're not a beginner. You get market structure, you know your chart patterns, but you're probably still dealing with that one super frustrating problem, right? You see that perfect trade setup, it looks absolutely textbook, and then bam, it stops you out by just a few pips before rocketing in the direction you predicted. So today, we're going way beyond just talking about stop hunts. We're going to dive deep into what's really happening behind the scenes. It's a concept called the inducement trap. And trust me, it's the real game being played in the markets.
So, yeah, let's just ask it straight up. Why does this happen over and over again? I mean, is the market rigged? Are your brokers out to get you? Well, the truth is actually a lot more sophisticated than that. It's got nothing to do with you personally. It's all about liquidity. And that beautiful, picture-perfect setup you spotted, that wasn't an opportunity. It was a trap. A trap that was carefully set, designed to fail the second you laid eyes on it. And getting this, really getting this, is your first step to trading like the big institutions do.
All right, let's break this down. To really understand the trap, we have to talk about the bait first. I call this the perfect setup illusion. You know that feeling, right? You're looking at a chart and everything just lines up perfectly. It's so clean, so textbook, you feel like there's no way it can lose. But that's exactly the feeling we need to start questioning. We have to start asking ourselves, why does this look so perfect? And this right here, this is the main weapon they use, the lure. Just think about it for a second. If a huge bank wants to buy, say, $1 billion worth of a currency, they can't just smash the buy button. The price would skyrocket against them immediately. No, they need a giant pool of sellers on the other side of their trade. So how do they get those sellers? Easy. They paint a beautiful, super obvious picture on the chart that basically screams, "Sell here," to everybody else. You see that clean trend line? That perfect double top? It's all a lure, designed to pull you in and create the liquidity they need.
In that whole process, that brings us to the actual technical name for it, inducement. Now, this isn't some fuzzy, abstract theory. It's a real, repeatable thing you can spot in the market. It's like the engine that pushes price from one pool of money to the next. And I'm telling you, once you learn to see inducement on a chart, you can't unsee it. You'll start looking at price completely differently, not as random wiggles, but as a calculated story of where the money is.
Let's really lock this definition in, okay? Because it's the key to everything. Inducement is a deliberate act. The smart money, the big institutions, they literally engineer these super obvious price levels just to get you excited, to get you to place an order, and, this is the most important part, to place your stop loss in a predictable spot. See, your stop loss isn't just your safety net. To them, it's fuel. It's a guaranteed pot of buy or sell orders that they can scoop up to fill their own massive position. So what does this bait actually look like? Well, these are the classics. Let's run through them. Think about a minor, obvious order block. Price shoots up, leaving this neat little untouched block behind. Every retail trader sees it and thinks, that's the spot to put my buy limit. That's bait. Or how about a fair value gap that gets filled way too easily, kind of in the middle of nowhere? That's designed to trick you into jumping in early, right before they sweep the price even lower. And maybe the biggest one of all, clean equal highs or lows. That perfect double bottom, that's not support. Nope, it's a giant neon sign pointing to the massive pool of sell-stop liquidity sitting just underneath it.
Okay, so the trap is set. Retail traders have seen the perfect pattern, they've placed their orders, and all their little stop losses are lined up just where you'd expect. Now comes the main event. For most traders, this is the moment of pure frustration. But for us, once we understand this, it's the moment of confirmation. We're talking about the liquidity sweep.
This chart really breaks down the two different mindsets. The retail trader is totally reactive. They see a clean support line and think, wow, that's a strong level. I'm going to buy here and just put my stop right below it. Meanwhile, the institutional mindset, the smart money, sees that exact same support line and thinks, hey, look at all those sell stops piling up just below that obvious level. Perfect. Let's push the price down there, trigger all those stops to fill our buy orders, and then we'll start the real move up. See the difference? They don't fall for the lure, they wait for the lure to do its job, and then they clean up.
So please, let's just get rid of the phrase stop hunt. It's not a hunt. It's a liquidity sweep. A hunt sounds kind of random, almost personal. A sweep is strategic. It's just a necessary step for institutions to get into the market with a good price. That crazy, sharp move that just took you out of your trade, that wasn't just noise. That was the whole point of the setup. Your stop order literally became their entry order.
Okay, so we've spent a lot of time on the problem. We get the trap, we get the bait, we get the sweep. That's awesome, but it's useless if we can't do anything with it.
So how do we turn this knowledge into an actual profitable strategy? How do we stop being the fuel for their fire and start riding the wave with them? It means we have to completely flip our entry strategy on its head.
Here it is, your new trading model. It's simple, but man, is it powerful. Step 1, you become a hunter of inducement. You start scanning the charts not for perfect setups to trade, but for setups that are, well, too perfect. You see that clean trend line and you label it in your mind, that's the inducement. Step 2, you do the absolute hardest thing in trading. You wait. You just sit on your hands and you watch price come down and smash right through that trend line, knocking out all the early birds. That's your green light. Step 3, now, after that liquidity has been swept, you look for your entry, because that sweep usually ends at a real institutional level, a bigger, more hidden order block, or a key fair value gap that was sitting right behind the inducement trap. That is your high probability entry. You're getting in after the trap has already sprung.
And when you start putting all this together, it's really more than just a new entry tactic. It's a complete shift in how you see the market. You stop seeing a chart as just lines and patterns, and you start seeing it as a battlefield for liquidity. You stop thinking like the herd and you start trying to figure out what the herd is going to do so you can trade against it. You start to think like smart money.
This right here is probably the most important question you can ever ask yourself before you place a trade. Forget about your entry for a second. Just look at the chart and ask, where is the obvious money, right? Where has the market built up a perfect-looking level that's going to have thousands of stop losses sitting right behind it? When you start your analysis with that question, these inducement traps they pop out at you. The chart tells a totally different story, a much, much more profitable one. Let this be your new motto. Seriously, write it down. Stick it on your monitor. Don't trade the pattern. Trade the liquidity behind it. So next time you see that perfect head and shoulders pattern, you're not just seeing a sell signal. You're seeing the pool of buy stops sitting right above that right shoulder, and you're thinking, the market's probably going to go for that first. When you see a clean support level, you don't see a floor, you see a target. You trade what they are hunting. You trade the liquidity.
So I'll just leave you with this question. The very next time you open up your charts and you see one of those can't-miss perfect setups, I want you to just stop. Take a breath and ask yourself, am I looking at a real opportunity here, or am I the one being set up? Am I the liquidity? Just making that one simple distinction, waiting for the trap to spring before you make your move, that will completely change your trading. It's the difference between being the bait and being the shark.